Hi everyone, this is Matthew at Das Trader. Today's video series will be in regards to a very common question that we get asked. How do I correctly set up a stop in DAS? So with this in mind, and that we are using high frequency trading platforms, we're going to go ahead and get started. We're going to just double click on that the demo trial that we had set up originally. And if you want to, you can always go back to the first video on how to get started and how to correctly set up your layout, etc. Okay, so for this exercise, let's say for example I use the hotkey that we set up last time. Just double click on the chart, and again, these instructions for hotkeys are in the previous email if you wanted to get, but I'm just going to basically buy maybe 300 shares of Intel, a marketable limit order with a 10-cent cap. And let's say okay, I bought this at 36.57 and I would set up a stop for this. So in order for you to set up a stop in high frequency platforms that are Nasdaq certified, you have to know it's a given. If you can't set, for example, just a stop market, unless that's your exit strategy, is to just lose money. So you go in here, you select stop as the route, and then you select stop type as the range, and say because we're going long and the lower range is always the lower price and the higher range is always the higher price. But that said, the lower price, since we're long, it's going to be our stop market. So we're going to set that, let's say we may say okay, 36.54 for that, and then let's say that the high range we'd set it for 36.60. okay, and then we just click sell. Now because we don't know what the stop will be, and the oh, looks like it's already dropping down, so I may need to change that a little further, but I'll try to explain it while it's happening in real time. Because we don't know what the price will be for our stop and what our target will be, it'll be changing, right? So we may buy Siri, we may buy TVIX, we may buy any symbol out there. Each stock is going to have a different price for our risk, and each stock is going to have a different price for our profit. So we can't automate this on a hotkey, right? A hotkey is for situations that when we know what we're gonna, we're always going to be, are we always going to be 10 cents below our entry and 20 cents above our risk? Obviously not. So it takes about 2 seconds to set this up. You bought this, and then stop, and then the range, you set up what your amount is and what your high range is, and then when you're ready, you can go ahead and click sell. So let's just watch this in real time. 36.54. There is a lot of support here. That's why I set that stop up there. So maybe you may want to put it just a little lower than that, in case, since this might be an area there where it may react and push back up. And if it doesn't, if it breaks down, maybe you want to set yours maybe about 4 cents or 5 cents below. So we set that up here, and if you right mouse click in the order window, you can see that our range 36.50 is set up and our target is 36.60. Now our target in our high range becomes our limit order, because there's a saying that goes, beggars can't be choosers. So that when you're in profit, for example, you can be picky on the price, but when you're losing money, once the trigger happens, 36.50, once that price hits, a market order will be issued to go out. In the same way, in the high range, when 36.60 price has been met, immediately the trigger will go out to sell, send a limit order for the price that you've designated here, in this case 36.60. And for the sake of this thing, we'll just watch, and in the next few minutes, if it doesn't go to 36.50, just I'm just going to go on and show you the example for how to set up a stop for your short. It's essentially the same thing. It's just that we have to be aware of the lower price is our target, so that's our limit, and the higher range is our, it's a no-no. So we want to, it's our buy to cover stop market. There it is. It's breaking 36.52. Again, I don't want to spend too much time on waiting for it to reach at that level, but I'm sure you can admire the anticipation as well as I do. And we can always click on the chart and press it, hit the 1 here just to watch it a little bit more close up. Intel is a very liquid stock. You can see that they have like 1,700 shares, 2,600 shares on several of these 36.52s. So all these guys need to be taken out before you even get to the lower level. So, and if you wanted to cancel this stop, it might be good to just show you right now. That way I can just change the stop for you. If you wanted to, like, for example, say you wanted to, and it's generally not wise. Professional traders generally, they don't change their stops, and the reason for that is that when you make decisions in the first entry, you've calculated what your risk is, what your benefit is, and when you go in and when you change, you generally basically set yourself up for missing out on your targets, because you may go into an emotional stance and say, oh no, I made a mistake and I need to change that. That's generally a good way to always lose money, because so you never, professional traders never ever change their stops once they've set them in, because it's been calculated on information that you've had in the past, and you've calculated the reward and risk reward ratio. So you can see that 36.50 price was met and a market order was immediately issued out. And that's the reason why professional traders, they know this. I'm just going to talk a little bit about this. Why you never set up a stop limit is because a stop limit, you're setting up a stop to get you out of a risk ratio, and a limit order doesn't mean that it'll fill. So when you set up a stop limit, and by the way, you can't just set up just a stop limit if you have a limit target, because we talked about this, that whatever order you send, whatever stop you send to the route, to the exchange, you've designated how your exit strategy is going to be there. And when you just send, for example, a stop market or a stop limit, which we'll talk about stop limits that they won't trigger on the limit, because a limit order doesn't mean so you may actually see the price even falling, but because you may have been picky on the price and said, oh, I want to have a specific price, because you just put yourself in the shoes. Imagine if everybody else in the world in a risk reward ratio says, I don't want to lose anything below this price. And obviously that's not the case. It's why there's such things as market orders and limit orders. And that's why stops are always market orders. For example, in our stop range, the low range and a high will always become your stop market. So once that triggers, it'll pull back up, and your target, your high range, will always be your limit price. So if you are trading an illiquid stock and it gets up to, for example, that 36.60, if it didn't trigger on your stop and it went up and it was like at 36.59 or 36.60, or it went up to 30.61, you said, oh, what happened? Well, depending on the liquidity of the stock that you're trading, again, liquidity does not have to do with volume, you may have to cancel that stop range and just get out at market, because you don't want to wait for the liquidity. The liquidity just might not be there for that stock, and you don't want to play around there and just hope that your limit order does trigger. So you always want to be aware of that. But I mean, if it was something like Bank of America or Intel, then it's obviously a different story. You can obviously see there's plenty of liquidity to go around, and there's so much even below that that just some things that you just want to keep in mind. Okay, so let's say we want to short Intel. Okay, so let's say I want to use my left and right arrows to pick up maybe 200, and I want to short. So it's hold shift and press 2. I'm short Intel, and then I want to go ahead here and select what my stop will be, and let's say I want to set it up to 36.52, because that's going to be my buy to cover stop market. And the low price, obviously, since we're short, we're going to pick something like 36, just for this example, because I didn't want to make this run a little bit too long on this video. Put this on 36.47, and we just we click buy because we're short and we're buying to cover on this stop range. Okay, so you can see that in the type column, and you can see in the average cost our entry was 36.49. If this does hit 36.47, that'll be a limit order that will issue out to the market. And this 36.52, that'll be our buy to cover stop market. So we're just going to watch this. And this is all happening in real time. This is 11:31. It's a real-time simulation. 11:31 is the time right now. And I may forward when I set this video up. I may have to forward if we don't want to wait too long to get this up here. I may actually watch it, let it play out, and then finish the video and kind of push over. But let's just see what happens. I mean, it's pretty close to that 36.47 limit order, and maybe you might be able to get a good idea of how limit orders and market orders work. Okay, it's running up a little bit. Let's take a look at oil market. We do offer real-time crude oil data feeds. I just wanted to see, yeah, this push down on Intel. The oil market's having a good sell-off in the morning. This is just an ETF you can use in the meantime if you didn't have. It's preferable that you have the real-time crude oil prices, because that runs 24 hours, but just a general sense, it's an ETF for that. And again, we are on the free trial, so the trial does have some delay feeds, but just for the general sense of the part, you can see that the oil market is having a dip down. But yeah, this is on the MX exchange and the NYC exchange, and those are delayed. And let alone the level 2 will be delayed too. We do offer real-time simulation subscriptions as well. So let's get back to the Intel here, INTC, and just see. Okay, so it looks like that's exactly what happened. If you look at your trades window, and if you click on the time, you can see that the Intel was bought at 36.47 for a limit order. So you can see that it did trigger at 36.47, and a limit order was sent to the market immediately to see if again, I prefer traders just kind of start practicing with more liquid stocks, and you can generally see what I mean by liquid. I mean 36.48. You can see below that several 36.48s, and these are 3,500, 3,100. So just to keep an eye on what you're trading, and limit orders on those illiquid stocks, those pump and dump stocks, they generally they don't have any liquidity on them. For example, stocks something like this, I mean, it would just be you would just know immediately these are not liquid stocks, right off the bat. So if you bought the same amount of shares, something you would have, you'd have to exit out of there and get back in, because these stocks, they generally have very illiquid shares. Their bid and their asks, look how far they are, 36.66, 36.78, and only 100 shares at these at this market maker for Nasdaq. So you got to keep an eye on. That's why I generally use the INTC and the Bank of America, and just be aware that Intel might have earnings that day, to also watch out for the liquidity as well on that day as well. Okay, so this concludes on how to set up stop orders. Hopefully this has been a guide. Again, if you miss something, always rewind the video, and we talk a little bit about why you don't use stop markets and stop limits in high frequency trading platforms. Okay, and thank you very much for tuning in, and hopefully this has been a good help for you, and have a great day. Thank you. Bye bye.